morning everyone. So today I will explain to you what are prepayments and how to account this in your books. Prepayments are just expenses that you have paid in advance during the year. The question approach is to identify keywords, and they are in advance is owed X amount from. You need to spot the year end and check all the dates mentioned in the question. You are also free to draw a timeline and a T account as well. Question: XYZ Limited pays an outsourcing company support cost annually in advance on the 1st of June each year. The year end is the 28th February 2018. You have an opening balance of 150 and there are some payments here made. The question is asking you what is the prepayments and profit and loss charge. When you study a question like this, it is good to lay out the information you already know and make a link between them. The year end is February 18 and therefore the start date is one day after 28th February, which is the 1st of March, and you go back 1 year, which is 17. You have made two payments on the 1st of June and the 1st of June 16 and 17, and we have different periods and different amounts as well. The P&L charge is anything between the 1st of March 17 to the 28th February 18. Therefore, if you work in a chronological order, you will start with the 1st of March 17 till the 31st of May 17, which was the last payment month for the first payment. Hence, this is worth 3 months. 3 over 12 times 600, you get 150. You then carry on, so the next day after this date is the 1st of June 17 till the year end, February 18. Then it is worth 9 months times the new amount, 700. P&L charge will then be the total of these two figures. Anything which is after the year end which was paid is then considered as a prepaid expense. The last month that they have paid is the 31st of May. Therefore, 28th February to the 31st of May is worth 3 months prepaid times 700. You can use a T account to illustrate the answer. First thing is to insert your brought forward figure, 150, given to you, and this is shown in the question. Prepayments are assets and therefore have debit balances. However, if a brought forward is not given to you, you need to think of a year back, which is on the year end 28 February 17, and the months which were prepaid were for March, April and May. If you look at this sheet, if the year end was February 17 and you have paid all these amounts in advance on that date, then automatically anything which is after February 17 would be considered as prepayments. Hence, 3 over 12 times 600. The next step is to reverse the brought forward. So you would credit your prepayments and you would debit your expense account. The next step is to record any cash payment, and this is debit expense and credit cash account, as you can see here. However, the first payment was not included because it was paid in June 16, and you need to remember that every transaction which is inserted in our financial statements are only things that are related to our year. The next step now is to post the year-end prepayments, and in this case you have calculated here 175, so you debit your prepayments 175 and you credit your expenses by 175. The balancing figure in the expense account will be the profit and loss charge, and this equals to the same figure as you can see here. Similarly, for prepayments, the carried forward figure 175 is the same as 175 as calculated here. If you want, what you can do is, you know that prepayments have a debit balance. Therefore, any brought forward will automatically go in the left section. And you know that 175 is the carried forward figure, so if it was carried forward here on the right 175, then carried forward will be on the left 175. So instead of putting prepayments here, you can put brought down and carried down here, just like our prepayments the account. It is a quicker way for you to go for the exams, but if it's a bit confusing, then you can just go back to this first method, which is the real method that you need to go normally. You can use a timeline to illustrate this, and I have focused on the last payment, which was from the 1st of July 17 to the 31st May 18, as you can see here. And this whole year was worth $700. There is, however, a cutoff period, that is the year end, the end of February 18, and therefore anything which is after the year end that we have paid in advance is considered as a prepaid expense. And this therefore explains why we have done this calculation, 3/12 times 700. I hope this tutorial was useful for you, and if you have any question, then don't hesitate to ask me in the comment section.